Good morning, and thanks so much for joining in. Happy Friday to you. This is Straight Talk on BQ Prime. My name is Alex Matthew, and with me is Hiral Dadia. Morning, Hiral.
Good morning, Alex.
I got a little tongue-tied with that. But then look, it is Friday, and we're getting into the mood. It's going to likely be a positive close to trade for the Indian equity markets this week. And what a week it has been for the equity markets, 19,700.
Absolutely. I mean, slow and steady is the kind of race that we've seen Indian markets gain. Clearly, if you go to see, it's the highest level in terms of markets in the last 1 month, 5 consecutive sessions of gains as well. And if you see in terms of sectors, it was FMCG as well as pharma that were the laggards yesterday. However, real estate as well as the PSU banking space actually picked up steam as well. If you see in terms of levels, now clearly after a volatile start, now the markets have started to rebound sharply. It's maintaining its upward bias as well and actually displaying resilience as well as a bullish momentum. From here on, 19,650 actually was the clear resistance level which the markets have been able to clear. And 177 points recovery is what we've seen from the day's lowest levels. If you see in terms of Bank Nifty as well, yesterday's session, it was interesting because it actually exhibited good amount of strength. And now it's anticipated that it will find support at 44,300 to 44,200 kind of a range. And resistance is seen at 45,400 to 45,500. So these are key levels we are watching out for. But clearly, if you see in terms of where markets are concerned, it's going to be interesting in terms of today's session as well, because if you're able to continue yesterday's momentum, Alex, then it's not very difficult to actually scale back those life high levels of 97 or something.
91.
91, 92
Yeah, 91,
is
92,
what we're tracking. So not very difficult to scale those heights yet again.
No, certainly. And in fact, over the last couple of days, Hiral, we've been speaking about that sector rotation that was visible yesterday. And incidentally, the pharma sector, which I think a lot of people in the industry were talking about in terms of potential over the last few months, that sector as a whole, the index, has moved sideways over the last 1 month or so. But remember, this is after gains of about 30% in the year to date so far, 2023 I'm talking about. We're going to focus in on this sector because there's a few very important deals to watch out for that are on the horizon. Monal is joining in to give us some perspective, and then we'll get the guest in to give you an idea of what to do with that information. Monal, good morning.
Morning.
We're talking about Cipla and a potential deal that is brewing, and that is kind of shaping the way that people are perceiving the sector as well.
Yeah, so for Cipla, it's been on the block, and there's so much of talk going around that the promoters are going to sell stake. A lot of news reports suggest that Dr. Reddy's might be the latest one to join the race together with Bain Capital. We also had Torrent Pharma on the block, and there was the initial talk started with Blackstone and Baring Asia PE. So now we just tried to assimilate a couple of views from a few analysts, and here's just giving you a gist. So what would happen if Dr. Reddy's were to acquire Cipla, as per the latest report? Now, we spoke to Abdul Qadir Puranwala, the analyst with ICICI Securities, and he said that Dr. Reddy's could be better placed than Torrent. And because of the strong US presence, it would be easier for Dr. Reddy's to raise the amount of debt it would need to acquire Cipla. Also, the synergies in India and US are better because this would help Dr. Reddy's achieve its goal of entering the top 10 in the domestic market. And for the US market, their base business was struggling for quite some time. So the idea is that if this acquisition were to go through, there would be some momentum in the base business of Dr. Reddy's as well. Conversely, IIFL Securities pharma analyst Rahul Jivani said that he prefers Torrent acquiring Cipla over Dr. Reddy's. Well, this is quite a tug of war for sure. For Dr. Reddy's, he said that they have a sizable acute portfolio in the domestic market, which is almost an overlap with Cipla. There could also be certain overlaps in the US business and the pipeline for Dr. Reddy's and Cipla, which is why it could have the risk of attracting scrutiny from the US FTC. There's another Indian brokerage which also spoke to me anonymously because they have interests. They said that they're marginally positive as the portfolios are relatively complementary, but the track record in terms of managing acquisitions historically has been average, Dr. Reddy's. Now, if Torrent Pharma were to acquire Cipla instead, IIFL Securities Rahul Jivani said that while he believes that it's a better strategic fit than Dr. Reddy's, it could also catapult Torrent to the numero uno position in India. And its past execution track records in acquisition is what makes them optimistic about it. If it were to drive cost savings that it's usually done, it would help them. It would help them make the deal EPS neutral in a year. However, they foresee certain challenges here. They're saying funding the deal can only up 30% stake, and it'll be dependent on partnerships with Ps, and there's an overlap in terms of business. Another brokerage says that there's a margin dilutive acquisition, and this is going to create a negative outlook. And both Torrent and Cipla's plants have been flagged by the US FDA. So scrutiny issues could be bogging them down. Overall, Vishal Manchand of Systematics did say that it seems like a stretch for most pharmaceutical companies because the kind of debt they'd have to raise on their balance sheet is going to be huge. So it's going to, and he's saying that investors might turn cautious of how it happened with Biocon when it acquired Viatris, and it had to take a huge debt on its books. So consolidation is that it's going to require execution and luck for anybody who acquires it.
This is going to be interesting. Thanks, Monal, for getting us the details, because this is going to be the largest deal in the Indian pharmaceutical industry as well. So we will watch this pretty closely in trade. But let's actually welcome in our guest. Joining us on the show is Purvi Shah from Kotak Securities. Purvi, one of the largest deals in the making. Who's going to be the contender? What modalities we are looking at? What's your read on this entire gamut with Cipla selling stake, Dr. Reddy's, Torrent Pharma, a lot of names that have been floating around?
Yes, good morning, Hagen. So as we know that there are a lot of names floating, and it is really difficult to guess at this moment who's going to end up buying Cipla. But as we know that Torrent and Dr. Reddy's, both names are quite, is something that we're listening a lot, and Torrent has been in front runner. So for both the companies, if you see the fit, it fits well. Of course, it complements well when it comes to Dr. Reddy's because of its presence in the domestic as well as US, and Dr. Reddy's and Cipla being similar size. For Dr. Reddy's to turn it around, even if they have to raise debt, it's going to be a little easier compared to what Torrent is, because Torrent is half the size of Cipla. So at the moment, we feel that we need to watch out as to who would come in. But in both the cases, the debt to equity or say EBITDA also is going to be high, and in the couple of first 2 to 3 years, it's going to be an overhang on both the stocks, as buying out this company will add to a huge debt on both the company's books.
So with what we know right now, and I think fair point, Purvi, where you're saying that we don't know how this is going to pan out, right? So we're going to make a few judgment calls right now without all of the information. But with what we know so far, how should investors approach the three names that we're talking about, but most importantly, Cipla?
So Cipla, we have, we've recently downgraded our rating from buy to add because of the limited upside that we see. So our new target price is 1,290, and the rating is add now, because we still feel that Cipla is a leader in the respiratory portfolio, and they have a couple of good assets that are planned for the US launches. So Cipla happens to be one of our preferred picks also in the sector. And as far as Dr. Reddy's and Torrent are concerned, we have a reduced rating on both the stocks. And we feel that with this deal coming in, so if whoever acquires, like I said, the debt on the books is going to increase. So that's going to be a little difficult for the initial 2 years post-acquisition.
So Purvi, let's look at both the companies, right? A combination of Dr. Reddy's and Cipla, and a combination of Torrent Pharma and Cipla. Which is more lucrative according to you from a product perspective, portfolio perspective, from a market perspective? And where would your bets be? What combination do you think is the best fit, which would actually create one probably in the top 5 of pharmaceutical names then?
Hypothetically.
Yeah, so hypothetically, if I have to say, so let's start with say Cipla and Torrent. So as we know, Cipla is a professionally managed company, and Torrent is a little promoter-held company wherein the promoter is involved in day-to-day businesses. So when it comes to Torrent buying it, domestic portfolios align well, but the US presence of Torrent, as we know, has been affected because Indrad being its facility, which is under the FDA scanner yet, and the business wise, if you see, it's a very small portion compared to what the US business for Cipla is. So in a way, of course, it gives them a good. Cipla becomes a good asset for them. The US business becomes a good piece for Torrent to get back on the US part. Similarly, if you see Dr. Reddy's and Cipla, domestic or US, both the pieces are equally well. In fact, Dr. Reddy's has better placement in US compared to Cipla. So that could help out if there is an integration post acquisition. That this will bode well for Dr. Reddy's. The positive that Torrent has at the moment because of their high promoter stake, the dilution of equity and raising debt is also going to be easy for, say, Torrent, or for that matter, for Dr. Reddy's as well. So at the moment, we feel that both have their own positives and negatives. Right now, I feel Cipla and Dr. Reddy's, again, they have both of them are professionally managed. So the culture and everything is going to be an easy fit also. So I would say both are at equal bets. So I cannot have my pick right now.
Purvi, we're so sorry for putting you on the spot, but then we needed to do that because the perspective that you have will definitely benefit our viewers when things actually develop in the space. So thank you so much for spelling it out. Of course, everything we've been speaking about is hypothetical in nature, and we've kind of precluded your comments by stating
more
that.
Than being in the spot, I feel that it's there are a lot of moving parts and variables to this deal. So the other thing that we also need to consider, see, at the moment, if we see that the environment for be it domestic or US for pharma sector is quite stable, and there's not much of a disruption that we're seeing. So when you come to net debt to EBITDA, we may feel that both the companies can do well, and probably say in the span of 2 or 3 years max, they can turn around this acquisition, and they can start adding to their EPSs. But if there is any change in regulatory landscape in India, as we've seen that there's a lot of talk about push for genericization, so that can be a disruptive. So your equations can change at one data point or a change in regulatory landscape. That's why we feel that we'll take it as how it comes.
Right. We'll take it as it comes, but this is going to be an interesting development as well for the pharma industry as a whole, with the kind of consolidation that all of us are staring at. Thank you, Purvi, for sharing the details and your views as well. But moving on from the pharma pack, an important announcement coming in for the likes of an L&T. A $4 billion contract is what we're talking about from Saudi Aramco. Okay. And yesterday, the stock itself did hit a record high. Plus, it was one of the top contributors to Nifty's move as well. Himansh, what do you have for us? What is this order and what would it actually mean for an L&T?
Right. You very rightly pointed out. The shares were catching steam yesterday, where they gained over 4.5% in trade before closing 4.25% higher on exchanges. So Morgan Stanley came in with their overweight rating on L&T following reports of a $4 billion order win from Saudi Aramco for phase 2 of their Jafurah unconventional gas development project. Now, the brokerage has set the target price as 2,935, implying an upside of 3% from yesterday's close. But it's important to remember that the stock has already caught up a lot of heat since yesterday. Now, this order win worth 32,400 crores comprises of a gas processing plant and a gas compression units. Now, this order would account for almost 13% of L&T's annual guidance of 10 to 12% growth in FY24 and also 17% of core order inflows. Now, Middle East accounts for 70% of L&T's hydrocarbon prospect list, of which 3.47 lakh crores in Q1 have already been a triple of the amount of a year back. Now, this is a lot of potential headroom, considering Saudi Arabia is in the midst of, transforming their economic landscape with over $1 trillion in investment commitments, of which 90% are lined up throughout till 2030. So it'll be key to watch out for L&T and these order win developments moving forward.
Certainly. Thank you so much for bringing us those updates. Very large order in the context of L&T's order book as well and execution.
And the FY24 guidance, it's I think 12 to 13% of the order inflow guidance. So that's going to be a big number to watch out for in terms of L&T and how the stock reacts in trade today.
No,
Alex,
and
as well.
certainly every time you talk about a company the size of Saudi Aramco, it's understandable that the scale is as large as we're speaking about. But let's shift gears a little bit and speak about insurance, because you saw certain data points that came in overnight, or rather last evening, where Life Insurance Corporation of India has had a bit of a wobbly month in the month of August, whereas a few other private life insurance companies have done better. And so overall, I think the industry is tilted to the negative side, but that doesn't tell the whole picture. Mihika is joining.
And SBI Life was one of the
which is why I'm saying
top gainers as well, clearly, and that was reflected in the stock price performance.
So it doesn't, like I said, it's not telling the whole picture. The devil is in the details, and Mihika is joining in to give you just those details. Morning, Mihika. What are you picking up?
So yes, we had 3 brokerage reports. The first one was HSBC on the Indian life insurance pack. SBI Life, HDFC Life, Max Life, and Bajaj Allianz reported strong growth in annualized premium equivalents in August 2023. The individual APE growth improved while the group APE declined. Private insurers reported a 13% year-on-year growth, but LIC's 11% decline dragged the marginal industry growth. Group APE declined by 23% in August, and the premium growth was driven mainly by growth in the number of policies, which was up 18% among the private insurers. Then we have Motilal Oswal that stated that there has been an increase in retail term and health insurance over the past quarters. They attribute the protection demand growth to innovative products and marketing strategies, and they believe that this momentum in protection is here to stay due to the low coverage in the people that are already insured and the widespread underinsurance. Health insurance has also seen strong demand despite the 15 to 25% premium hikes that were implemented by standalone insurers and general insurance companies. SBI Life and Star Heal remains Motilal's top pick. Motilal Oswal maintains a buy on SBI at a target of 1,570 rupees. The brokerage is positive on SBI due to its growth potential, their cost management, and its healthy return on embedded value of 20% plus. They maintain a buy rating on Star Heal as well at a target price of 760. They remain optimistic in its growth in the retail health side of it due to its underpenetration and earnings growth. They project a 19% gross premium CAGR over FY23 and FY25. Then we have Nomura. On the August 2023 volumes, Nomura observed a 14% growth in the new business annualized premium equivalent at the industry level. Private insurers drove this growth with a substantial 21% year-on-year increase, while public insurers saw a modest 3% growth. In their coverage, Nomura prefers SBI and HDFC Life due to their consistent market share gains. SBI Life has achieved a 16% market share year to date and a 34% individual AP in August. HDFC Life also picked up momentum in August with a 24% AP growth, and Nomura remains positive about HDFC's performance potential given its strong distribution networks and adaptability across different channels.
Thanks, Mika, for getting us the details on an interesting pack that we should be watching out for as well in today's session. So clearly, from pharma to cap goods, and now we've spoken already about insurance. So these 3 sectors will remain in focus as we speak. But apart from this, a lot of other names that will remain in focus in today's session. Saloni is standing by to get us more. Saloni, which are the stocks that you've been tracking?
Right, so first we've got Tata Steel, so whose unit, that is Tata Steel Special Economic, has signed an agreement with Avada Group to set up a green hydrogen and ammonia manufacturing unit in Odisha. So this park will be set up in the Gopalpur Industrial Park in Odisha. So while the company has not disclosed any financial details related to the project, this project is expected to generate around 1,600 direct and 4,000 indirect employment opportunities, and it aims to curtail nearly 2 million tons of carbon dioxide emissions annually. Next, we've got LTI Mindtree. So the company has launched 2 industry solutions, AdSpark and Smart Service Operations, to accelerate the time to market for businesses on the Salesforce platform. Third, we've got Mazagon Dock Shipbuilders that signed a master ship repair agreement with the US government. So the agreement is expected to open up voyage repairs of the US Navy ships at Mazgon, and the company is just one of the 2 shipyards in India that has signed an MSRA. Then we've got Exide Industries, that plans to invest 100 crores in its subsidiary Exide Energy Solutions. That is the unit that is engaged in the manufacturing of battery cells of advanced chemistry via a rights issue. The company is acquiring 3.22 odd crore shares of rupees 10 at a premium of rupees 21. Exide Industries shareholding in its unit will remain unchanged at 100%. And lastly, we have Sterlite Technologies that has partnered with True Vista to drive growth of South Carolina's rural connectivity infrastructure. So the companies are investing heavily in the manufacturing and building of fiber networks for South Carolina. So Sterlite has invested significantly in the state-of-the-art fiber optic technology manufacturing facility at Lugoff with end-to-end advanced automation. And in a similar vein, True Vista is investing over $12 million in a rural broadband, so a significant portion of which will be dedicated to South Carolina.
All right, so quite a few stocks to bear in mind. Thanks, Saloni, for bringing us those updates. Let's focus in on the primary market, and we've got a listing to watch out for today. The company's name is Rishabh Instruments, and in the IPO phase, at the close of day 3, this is an IPO that has been oversubscribed by as much as 31 times, if I'm not mistaken. Rishi is joining in to give us some perspective on what is expected. Rishi, so I'm guessing some of our viewers are familiar with this, and this is kind of becoming the season of IPOs. What can you tell us about Rishabh?
So just a quick snapshot of what happened during the IPO. The price band was at 418 to 441. And it was a 490 crore IPO, and out of that, a majority was OFS. So the OFS was to the tune of 415 crores. The fresh issue was at 75 crores. Now, the subscription, as mentioned earlier, was at about 32 times. When we look at its business model, it's something that is really unique because it has no listed peers, even within whether domestically or internationally. It is a supplier of energy efficient solutions, and it focuses on electrical automation, metering and measurement, precision engineering items with applications across the power, automotive and industrial domains. It has served customers in over 100 countries in over the past 3 financial years, which has led to a significant share of the export export revenue coming in. Export revenues account for about 2/3 of the total revenues. Quick snapshot of the financials as well of FY23. Its revenue stood at 570 crores, which was a 21% growth, but its profits were a bit flat. If you look at the margins, they declined to 13.4%, and the net profit was also flat at about 49 crores. When the IPO does get listed today, it's going to be about it's going to have a 2,000 crore market cap, but all will depend on how the stock performs because, as I said earlier, it has a unique business model with no listed peers either domestically or globally.
Right. So these are interesting ones to watch out for from a primary market perspective. Thank you, Rishi, for getting us the details. And one more stock that I would want to highlight, Alex, is Campus Activewear. Purvi Shah has resigned as the CEO effective 2nd of December. And he was just recently, he was appointed elevated to this role. So it's going to be interesting to see how this stock reacts and trade. There could be some sentimental negative move that could be coming in on this counter. But lots to watch out for. We've already highlighted the sectors, and keep your eyes absolutely open in terms of the movers and shakers of trade today. That's all that we have on this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BK Prime.